Are we experiencing a rare economic golden age despite numerous challenges?
Or are we on the brink of an inevitable global financial shift? What risks should we be prepared for?
Well, let's find out.
Riding the economic wave straight into a storm, how does the economy continue to thrive despite numerous challenges? Is this upward trend a sign of enduring strength or a fleeting moment of success? In an extraordinary turn of events, the global economy is showing remarkable resilience. The US economy has surged with a 5.2% growth rate in the third quarter, surpassing all expectations. Similar trends are observed worldwide, with inflation rates decreasing and unemployment figures staying low. Central banks seem to have paused their monetary tightening, signaling a period of economic stability. But the question remains, how long can this positive trend last? The foundation of this growth is not as solid as it seems, with several underlying challenges. From the ongoing geopolitical tensions to the looming threats of higher and prolonged interest rates, the current economic landscape is far from stable. Understanding the dynamics at play here is crucial to gauge the future of global economic health.
Higher for longer interest rates, a blessing or a curse? Interest rates are a key player in our financial world, but what happens when they stop rising yet remain high? How does this impact our daily lives and the broader economy? Interest rates have always been a critical factor in economic planning. Recently, central banks, including the Federal Reserve and the European Central Bank, have held rates steady, introducing a new phase in economic management. While this stability in interest rates provides some predictability, it also brings challenges. For instance, the US government's borrowing rate for 30 years has risen dramatically from 1.2% to 5%, reflecting a global trend of increasing borrowing costs. Such high rates, while signaling a recovering economy, also pose risks of stifling growth and investment. This presents a complex challenge for policymakers, balancing the need for economic stability with the imperative to foster growth and keep borrowing costs manageable.
Consumer savings are depleted, but spending remains high. Why are consumers still spending despite expectations of depleted savings? What's the secret behind this unexpected financial resilience? A surprising element in the current economic landscape is the enduring consumer spending, particularly in the US. During the pandemic, Americans accumulated significant savings through government handouts and reduced spending opportunities. Contrary to expectations, these savings haven't depleted as quickly as predicted. Recent data suggests that there's still about $1 trillion in excess savings. This financial buffer has enabled continued consumer spending, driving economic growth. However, this raises an important question. What happens when these savings are eventually exhausted? As these savings diminish, high interest rates might start to affect consumer behavior more significantly, potentially leading to a decrease in spending and, consequently, economic growth.
The effect of the debt burden and government spending. Can the world's economies sustain their spending sprees? What are the implications for us all? The increase in government borrowing globally has been a notable trend in recent years. This fiscal expansion, initially a response to the pandemic, has led to significant government debts. For instance, major economies like the US, Britain, Japan, and several European countries are projected to run substantial deficits in 2023. This high level of debt, manageable during periods of low interest rates, poses a serious challenge as rates rise. The cost of servicing these debts is becoming increasingly burdensome, impacting government budgets. This situation not only strains public finances but also sets up a potential conflict with central banks' inflation-targeting policies. Balancing fiscal responsibility with economic growth in this higher-for-longer interest rate environment is a delicate and crucial task for governments worldwide.
AI, the economic game changer. Could advancements in technology, particularly AI, be the hero we need in these uncertain economic times? How might this influence our financial future? Amidst economic uncertainties, technology, especially AI, emerges as a beacon of hope. The potential of AI to drive productivity growth is immense. This technological advancement could provide a much-needed boost to economies worldwide, making the current high interest rates more bearable. Recent data, indicating a surge in US productivity, partly due to technological advancements, reinforces this optimism. The tech sector's resilience, reflected in the stock market, hints at AI's transformative potential. However, the true impact of these technologies on the broader economy remains to be seen, and their ability to offset economic challenges is a topic of keen interest and debate.
Facing an uncertain economic future. With a world facing numerous threats to productivity, Can the global economy maintain its current trajectory? What risks should we be prepared for? The current economic optimism faces several global threats that could disrupt productivity growth. Geopolitical tensions, shifting government policies, and increasing state intervention in markets are significant concerns. Additionally, factors like aging populations, the green energy transition, and rising defense spending are reshaping economic landscapes. These challenges highlight the precariousness of the current economic trend. Betting on continued economic stability in the face of these risks is a gamble. It's essential to maintain cautious optimism and be prepared for potential economic shifts. Understanding these complex dynamics is key to navigating the uncertain waters of the global economy. If you enjoyed this video and want to see more content like this, make sure to hit that subscribe button to never miss an update. It really helps support the channel, and we'd love to have you as a part of our growing community. Thank you for watching, and happy investing.